Hey all, welcome to the GMT family. Today we are driving deep into the most renowned topic is fund accounting. So it is a critical topic for everyone who involved in the finance, investment or accounting. Whether you are a finance student, professional, this video will give a valuable insight into the financial accounting and its important in the financial ecosystem as well. So before moving to the topic fund accounting, just want to explain you the fund accounting is the backbone of investment transparency. Why? Because giving one answer to you about all the thing, just I want to brief down what is fund accounting first. So just we give the example through the Excel. Okay, if we divide this two word fund accounting, so what it will give? So fund means whatever fund you are doing in your you heard about the private equity mutual fund or maybe the ETF or hedge fund. So fund in fund accounting, the fund means this only: the hedge fund, mutual fund and the private equity. The same like accounting means what? You have heard about in your college, in your 11, 12 if you do the commerce. So what is accounting? Accounting is a recording, summarizing and analyzing. Same concept we apply into the fund accounting. So this concept give the accounting of a fund whatever you are doing. So if you are working in any corporation, so you know that this fund is related to private equity, hedge fund or mutual fund, accordingly you will do. Now moving to the basic thing, what is fund accounting? So the fund accounting, before going ahead, what fund accounting involve, like stakeholder, like various participant we can say. So we have various participant or stakeholder in the fund accounting. So first stakeholder is real investor, retail investor. So we can give the name of a stakeholder. So first is retail investor. We'll go one by one. Before I am moving to the detail part, just understand about who is getting benefit, who are involved in this. So you get a better understanding of all concept. So first is retail investor. So retail investor are some like our common people, like who invest into the mutual fund, ETF with a small amount, like five. You can invest in mutual fund with a 500. Some are the 100 only. Some you can invest in small amount for the retail investor. But there are some big investor as well who invest into the private equity, or we can say that it invest into the hedge fund. So they are called as a institution investor. Why they are called as an institution investor? Because they are come with the large amount of fund. They are individual fund, not their company fund, their corporate fund. So like a pension fund, like a insurance company, like LIC, SDFC Life, LIC Life. So they collect a premium from the everyone. They get a one premium amount every year. So they know that when the who is taken the insurance, they will get after 10 year, 15 year, 30 year of maturity. So what they do, they will invest into hedge fund, private equity, or maybe in the mutual fund, or maybe the government also do that fund. Like you heard about the Atal Pension Yojana. So they are collecting money 250, 300 rupees, 350 every month from the common people, and they will get a pension after 60 years they close. So government will invest through the institution investor in the fund. Some are the general partner. So this general partner rule came when you invest into the hedge fund. Okay, so when you invest into the hedge fund, so this will come general partner and limited partner. So general partner are that sorry, I just want to correct, it is a for hedge fund and private equity both, this concept will apply. So general partner are some we can say that manage the fund and make the investment decision as well, and typically they invest their own capital and earn management fee and performance fee. So they are the partner who invest into hedge fund and private equity. The fourth stakeholder are the limited partner. So this also raise money for a fund with a less amount than general partner, but give the more amount than the retail investor. So it is a passive investor in the private equity and hedge fund, such like a family offices or sovereign wealth fund. Majority of the capital, but they have a limited liability. So they invest into hedge fund and private equity with majority of capital, but they have the limited liability, and more like we can say the more decision are taken by the general partner who are managing the fund accordingly. Now we are moving to the fifth stakeholder. The fifth stakeholder is plan participant. So what is mean by plan participant? So plan participant are beneficiary of a pension and retirement fund. Contribution are made for the long term growth. So some firm are there who are core business into pension and investment. So they firm invest into that part. So the sixth stakeholder is the endowment and beneficiary. So endowment and beneficiary are those who have the we can say the non-profit organization. So that includes the university, like colleges, universities, and they include non-profit organization, profit organization, and seventh one is charitable organization. So we can conclude into the non-profit organization as well. So this fund accounting use for this part, and then we'll go to the other part as well. So now I'm coming to the PPT part. So fund accounting we just bifurcate it. We discuss about the stakeholder. Now I want to go to the deep into the fund accounting, where we'll discuss about the asset, liability, income and expenses as a fund level. So how they do the analyze, summarize, and record the transaction. How they record? They want to record their asset, liability, income and expenses as fund level. So how they will record? So before recording, what should we include into which level? Like asset level, what should we include? So we'll check that. Okay. So one by one. So now we are moving to the recording part. So what to record, what to analyze and what to summarize. So for asset part, just I will written in middle. So one by one we can go. So asset part, what should we include? So first part is cash and cash equivalent. So I give the first number here, cash and cash equivalent. So when I am typing, so I uh, get a time to write. So meantime you can search your answer as well. Search means just analyze your answer. So if both answer is correct, then you are going with the same direction. Okay. So cash and cash equivalent include the bank balance of a fund. So here we are not talking individually, we are talking here fund level. So fund level, bank balance and money market instrument. Sometime if some fund have the bank balance, so they will invest their money overnight. Some overnight facility are there, so they get a interest daily at market close. Their fund is like 500 crore in their account, so they invest into money market, and then morning this fund will came into account before the trading start, and whatever the night holding money is there, that call as overnight. So that fund also can get a money when the market is closed. So this is a money market instrument. The second part is investment, most important part. So asset of a fund is only the investment. So they invest into various directions. So just we take a common example. They invest into stock, bond and real estate, for example. And there are many product, derivative, swap, option, future, anything they can invest, but I take a three example to not confuse you at a one go. Okay. So second part is investment. Then the third is receivable. So this all are coming under the header of a asset. Just do not forget this part as well. This all are coming into the asset part. So receivable. So receivable are the interest income they earn. Like for example, they invest into bond. So whatever the interest they are getting on the bond should be there, and dividend income. If they invest in dividend, so they get a income on dividend also. Then we are moving to the fourth part. The fourth part is prepaid expenses. So prepaid expenses are made in the advance for the fund operations such as insurance and the subscription. So I think this is a self-explanatory. Now I am moving to the liability part. Just I will highlight this color so not confuse. Liability side. Okay. So first part is coming account receivable payable, sorry, point number 1, account payable. So what it includes in account payable? The unpaid amount vendor, investor or for service like legal and audit fee. So pending payment left at our side to give to the vendor or maybe investor for the any fees or some legal or audit, it's come under this. So I will give two example here: legal fees and audit fee. So it goes to the maybe your vendor or investor. Now we are moving to the second part. Second term of liability is investor payable. So what is investor payable? So distribution and or redemption owed to the shareholder. If something redemption and distribution happen, so redemption term is used in mutual fund and distribution term is used in private equity and hedge fund. So remember this point. If you're preparing for the interview, so some terms you have to be careful while discussing in your interviews before you read the your job description, which level you are applying, which funds they will doing. So accordingly you have to give the answer. Okay, so the third part is accrued expenses. So what is accrued expenses? The expenses incurred but yet paid, such as performance bonus and administration fees. So something that yet to be not incurred, but we have to pay into future. So some like administration fee, we can see the admin fee. We can take example of admin fee and performance fee. So I will take an example of performance fee. For example, your fund performance hurdle rate is 20%, and your fund, you are not expecting that it will perform 20% or not. So you are expecting it will go by 25%. So then above 20% to 25%, like 5%, you have to give the performance fee to the general partner on the appreciation of the share. So it is a not paid, means this may happen and then you have to pay this fees. Okay, like this we are moving to the fourth part. The fourth part is debt instrument. So in debt instrument, how it's work? So loans or credit facility used for leveraging investment into hedge fund and private equity. So when you are doing some loans or some credit activity, that time this term will be used. So what is the income for the fund? So this is also an interesting topic. So we'll move to the income part. We'll discuss about the income for the fund. So first is whatever you invest and you are getting the income from that. So you invest into bond, you invest into the fixed income securities, then if you invest into the stock, then you receive the dividend. So same is the income for that. So I write interest and dividend. So I am just giving the general overview on the fund accounting, because if you know this basic thing before I move to the detail part, then you can correlate very easily. That's why I am spending much time on this part. Realized gain. So you heard about the realized gain. What is realized gain? Realized gain is something like you buy your stock at 100 rupees and you sell the stock at 150 rupees. Okay. So whatever the profit you book, means you book already, you sell this quantity and you book the profit, is come into the realized gain. And for example, you did not book that 50 rupees profit per share, that come into the unrealized gain. So if you have doubt on this part, you can directly comment us. So we will share you our link. If we have a detailed video on this part, so you can go on the realized gain and non-realized gain. Then the fourth part is management fee. So management fee is a income for the general partner. That's why it's coming into the income part, because here if hedge fund or maybe private equity general partner who are managing the fund, managing means they are handling all the operation of the fund, so they are getting the management fee as like a salary they are getting. So that are the income for the fund. So if we earn from the managing the investor, like for the general partner only. Okay, so now I am moving to the expenses part. So what is the expenses for the fund accounting? Fund. Okay, so expenses. So expenses is management fee. If fund is giving management fees to the general partner, so it is the expenses of a fund, because he is giving his profit, whatever profit he is earning, he is giving to the general partner as a management fee. So it is a expenses for that. Performance fee. If fund crosses hurdle rate, means they decide when the fund start, they decide that If fund perform more than 20%, 30%, above that whatever the profit will be there in percentage, the some percentage is fixed for the general partner, and they will get a performance fee as well. So this is also the expenses for the fund. So now I am moving to the third, custody fee. So custody fee is something who safeguard your all the investment, stock, bond, whatever you invest, to safeguard the all the thing and provide many thing. I will, when we are doing this custody part or custodian part, I have prepared the detail on this. So we'll discuss on this part in this video only. Okay. Now the fourth part is audit and legal fee. Audit and legal fee. So audit and legal fee is a cost that every fund has to give, some signing of the document or maybe do the auditing of their whatever the transactions, so they have to give. Fifth part is interest expenses. So you are confused on the interest expenses. On borrowed capital used for leveraging. For example, you have borrowed some loan for the fund, then you have to pay the interest. So that also is come under this part. And the administration expenses means the admin fee. You, if you are working profession, you are heard about the admin fee, that is a come under the expenses. So this how we are completed with the our asset, liability, income and expenses of the fund as per our PPT. So when somebody asks you about a fund accounting, you can just explain with this, and what are the asset, liability and income and expenses at the fund level we also discuss, as well as to maintain this all, we have to maintain the ensure the compliance with the regulatory standard and decision making on the stakeholder as well. Okay, so why I explain this is a whole cycle is there. Start with the fund accounting, asset and all, then we have to maintain the compliance and regulatory action, and if somebody breach the compliance and all, so who are that, so some stakeholder that, so we also discuss about the stakeholder also. So who are the stakeholder of this, maybe need to be careful on this part, so they cannot breach the compliances. So now I am moving to the next slide. The next slide is more more insightful in part of a fund accounting. So what are the key players of a fund accountant? Okay, so investment bank like Morgan Stanley, Goldman Sachs. Custodian are the BNY, State Street, and investor. So how this relate to each other, we'll discuss on this part. So for example, we'll start with the investment bank. So how the investment bank play the role in this part? So for investment bank, it helps for capital raising. For example, if you take example of mutual fund, hedge fund or private equity, they help on the capital raising. So how they will raise the capital raising? Through IPO, private placement and structure product. They will also provide a advisory service which provide a guidance on the merger and acquisition, corporate actions, activities, portfolio of company and private equity. So the example of the investment bank already I given. Trade execution, they also help on the trade execution part, facilitate buying and selling of a security for the hedge fund, mutual fund, and also provide the high frequency trader for the hedge fund when they do the derivative trading also. They also do the risk management at a part of it when they do the derivative trading. Structure product for the fund of a hedge fund, currency, interest rate, and the market risk. So for just to give the risk management example, we take a swap example. So creating investment rate swap for the mutual fund to hedge fund and portfolio risk. Investment bank also provide a research and insight, provide market intelligence on the financial research and the investment decision as well. So here we are moving to the next part is a custodian. So what custodian play the role? So custodian will be helpful in the part of a safeguarding the asset. So this is important, that's why I am writing here, because most of the time if you are giving the interview, so they will ask about the custodian part. So just I will note it down for you so you can better note down custodian part. Okay, so I am just giving the role of the custodian, you can just formulate accordingly. So it is safeguarding the assets, so asset safeguarding, or we can say safekeeping. So hold security of a stock, bond, cash on behalf of a fund. And Bank of New York is an example for that, for custodian who handle the mutual fund asset worth rupees $2 and for the hedge fund it's safeguard around dollar 1 million. It's also help on the trade settlement as well. So I note down trade settlement as well. Then it's give ensure the trade executed by the fund and settle on the time. So state sheet is an example of this, who is giving the better trade settlement on this part. So second is done. Now moving to the third part. The third part is record keeping. So whatever we discuss at early, the same is replicating here. If you just do the attention, what time I explain the fund accounting, record keeping. Then fourth part is income collection as well. Means collect the dividend, interest, and other income generated by by the fund asset is also taken care by the custodian. So Northern Trust assuring interest payment on the bond investment reached to the fund. So I give the one example as well. So fifth is regulatory compliance. This also helps the fund for the regulatory compliance as well. Okay, so monitor and report compliance with the local and international regulations. So example is the FECTA and CRS. So I just want to give the example, just short view. The FECTA is a Foreign Account Tax Compliance Act and federal law requiring all the non-US foreign financial institution to search their record for the customer. So it is for the all the non-US firm. And CRS is a common reporting standard, automate exchange of a financial account information between jurisdiction for the tax purposes. So these are the two regulatory compliance that I give the example as a part of a custodian. So this how it's relate. So now we'll move to part of a investor. So investor we already discussed when we discuss about the stakeholder. So investor are the retail investor who invest into mutual fund and a hedge fund with a small amount. Institution investor are those which have the large capacity to invest, so they invest into the hedge fund and private equity. So what I explained previously, same will be relate with all the PPT. So that's why I just explain you at the first part. So now moving to the second part of this PPT. Okay, third slide of this PPT. So why this fund accounting came into action? So fund accounting versus traditional accounting. The fund accounting is track fund specific restriction and the investor allocation as well. But traditional are doing focus on the profitability and financial health also. Focus on the restricted unrestricted fund at a portfolio level. Focus on revenue, expenses and company. So key report includes NAV, investor allocation and fund balance. Key report include balance sheet and income. So this is how the fund accounting and traditional accounting differentiate with each other. Now moving to the fourth slide, types of a fund. So most probably you are heard about the hedge fund, private equity, mutual fund. But apart from this, many funds are there, but I did not cover in this part. But it is real estate fund accounting is now trending. Second is ESG fund accounting also trending. So more than the job opportunity and job increase more than 100% in the ESG sector. So this is not our topic, just I want to explore you. So hedge fund is a complex portfolio including the derivative and short positions. Example is a 500 million short long equity managed by the Morgan Stanley required a NAV calculation for this. Private equity, Goldman Sachs PE fund, second raise 2 billion segregated. This is a live example that I have mentioned. And for the mutual fund open ended close offering liquidity to retail investor as well on the part of this. So this is how relate. So now I am moving to the fifth slide. So accounting standard in the fund accounting. This is the most important part when we are discussing about the accounting standards. So say there are some standard has been maintained to regulate. So everybody should be work under this act, or we can say that compliance and regulatory will not be breached at this time. So that's why this this standard has made. So we'll start with the GASB. It's relevant for the public pension fund. So GASB relate to the governmental accounting standard board. His role is to establish accounting standard for the state, local government in the United States. And is for some key aspect also there, the fund segregation. So GSP assure public fund are segregated into different categories like general fund, a specific revenue fund and capital project fund. So there are some aspect of this is this fund should be divided into the three segregation uh, uh, before it get launched, before it get set up. So first is general, special and the capital. There should be transparency between focus on the public accounting, ensuring the taxpayer should know how the fund are used. So whatever they invested money on this fund, so investor give the each detail account that how their fund investor are utilized and how the fund manager are investing in this, which asset they are investing, and key report as well, the statement of a new position equivalent to the balance sheet but tailor for the governmental fund. So they will release the statement of a new position is equivalent is same to the balance sheet. The statement of activity shows the how the fund allocated across the various function. For example, infrastructure project. So when some fund follow this GASB, they have to follow this three terms: fund segmentation, transparency and key reports. Then I am moving to the next part, FASB. So what is FASB means? FASB is a financial accounting standard board, govern accounting standard for the non-profit organization, private placement companies into United States. So this is for the non-profit organization and the private company. So there are also the key aspect of this is ensure proper regularity of a donor restricted and the unrestricted fund, guide how non-profit recognize contribution, pledge and grant, for example university. IFRS used by the government global funds for in the cross border operations. So this term is very you heard about this term, so I want to go deep into this term because this term is usually asked. Okay, but you do not forget the GASB and FASB because this is a new term for you. Okay, so IFRS is an international financial reporting standard, is full form, globally recognized accounting framework used by the entities outside the United States. It supplies the non-profit corporation, government link entities in the many countries. So key aspect of this globally accepted, ensure uniform reporting standard across the country, revenue recognition aligned with the FRS, income for the grants, donation and the contribution. Statement of a financial position involves detailed asset, liability and the fund categories. Statement of a comprehensive income provide insight into the fund specific revenue and expenses. So these are the some terms that I have discussed. If you are if you can rewind this whole thing and note it down in your book, because this is I am collected some key points of all the GASB, FASB and IFRS. So you can note down this key point because this is collected from the various source. So now I am moving to next slide. In fund accounting, net asset value is very important. So this is give the overview of your fund performing, is an indicator who give the performance of your fund. So it is a critical concept in fund accounting, particularly for the mutual fund, hedge fund, private equity. It is a calculation that reflect the per unit value of your fund and plays the significant role in evaluating your fund performance. So I want to not go much on this part because I created one video on separate. I think it is available in YouTube. So what I will do, I will just in this video I will give the in detail section, in description section I will attach this link so you can go through it, but do not forget to go through it. It is a component of practical example. You can check it out in detail breakdown and make sure it watch it again to complete the understanding. So I just request you, humble request you, I will share the link on my this video end. So next slide is the most important again because it is a fund accounting cycle. So revenue recognition, expenses allocation and the asset valuation and income reporting. So this is a important, but I want to give my some simple step of this fund accounting cycle. Just give me a minute, I am just scrolling down. So meantime, if you have any doubt, you can definitely comment us, so you have a time. So I will note down here the fund accounting cycle. So what is fund accounting cycle? So fund accounting cycle start with the fund setup. So here the fund admin play the role. For the mutual fund, retail and institution investor will submit the money for the fund setup. For private equity, LP and GP will give money, and for hedge fund, it is a strategy specific fund. So it depends on that. The second point is revenue raising. So how you can raise the revenue. So revenue raise for revenue, how the revenue recognize means how revenue get generated. So generated for the mutual fund, it generates from the dividend and interest. Private equity, when the fund exit, that time you get a revenue, and all the money are distributed among the partner, because in private equity they do the investment through the tranches, high margin, low margin, and accordingly it will do. For hedge fund, performance free, then the trading gain what is generated accordingly is distributed. The third point is expenses tracking. So what is expenses tracking? So expenses means expense ratio at a fund mutual fund level. Private equity is deal cost, and for hedge fund is trading and brokerage fee. Then moving to the fund transfer part. So this is an important step when the fund accounting, how it's work. Then fund transfer. So when fund transfer, you heard about the master and feeder part. So master part is something where the fund get transferred to moved to the trading account of a broker when the broker want to buy. So for mutual fund, it's reflected as subscription redemption. For private equity, it's reflected as a capital call, and for hedge fund, allocation of a gain and loss is reflected like this. Then the fifth part is the most important part, is a reconciliation between the broker, custodian, between the client, between the application what you are using for the fund accounting. Okay, so maybe Geneva, Investran, Aladdin, whatever you are using is using, then you do the reconciliation between them. Then part of a reporting, you heard about the financial reporting. So financial reporting is come into this part. So quarterly, annual performance report between for mutual fund, for private equity IR and MOIC, and for hedge fund it is a risk adjusted return and monthly thing on this part. So this reporting part is why it's important, because it give the overall view of your uh, fund. So sometimes it will gives the overview in the good term, but sometimes it will disturb also. So you should be make sure when you do the reporting. Okay, so the next part is auditing part. So if all thing is correct, then we can move to the auditing part as well. So for auditing mutual fund, CE and local regulations compliance. For private equity, portfolio valuation review. For hedge fund is NAV and fee compliance. Then the closure will become. So this is how it is working. So now I am moving to the my slide. So same like some step are missing, but we can have discussed in Excel. So this step you can remind is a generic step, but this is a just professional one. So revenue recognition is management fee. Example, hedge fund charge 2% of AUM annually, performance fee 20%, return above the hurdle rate. Expenses of custody fees and transaction, asset valuation, daily pricing through the fund, mutual fund, real time system like Bloomberg, quarterly valuations of your private equity on this part, and investor reporting. So what we have discussed, same like here it is reflected. So now I am moving to the next part. The next part is reporting and transparency. So when you do the fund accounting, reporting and transparency, so what is important for the hedge fund, for the for the mutual fund, most probably is important the NAV, because daily pricing of a mutual fund and monthly and hedge fund is give the clear picture of your fund performance. Investor allocation is a part of that also. So it should be clean and breakdown of your return, expenses and ownership by this, and regulatory compliance whatever you are following like FACTA or maybe AIF, TMI, whatever following should be follow correctly. So now moving to the technology in fund accounting. So fund accounting is a detailed view of each and every trade, what you process, each and every fund you infuse, each and every expenses you made, income you made, or something you made. So it is difficult to maintain to traditional books or something. So technology has been placed into this. So Geneva is the most firm are using as a accounting platform for the hedge fund accounting is by the SS&C. The second is Edward Portfolio Exchange APX Multi Asset Fund Management. Aladdin by the BlackRock, who are the owner of this. So technology are doing the fund accounting. So what are the challenges of this fund account, challenges and opportunity for the fund accounting part? We will discuss on this part. So challenges are managing multi-currency portfolios. So the mutual fund, hedge fund, or private equity not invest into their local as well as they invest into multiple currency. So sometimes it will difficult to manage all this, but now the technology has get into more. So real time basis portfolio are generated now. Regulatory compliance into global, this also something, because they invest into multiple currency, but every country has different regulatory, so it will difficult to fund to make this thing also. So opportunity of this as well also include this. So using AI tool to predict investor behavior and optimize reporting as well. Sometimes AI also come, like we also heard about the logarithm that provide future prediction of an investor how they will behave. Implementing the blockchain facility. So blockchain is an important part that I want to explain you. Sometimes it will ask into interview as well. So blockchain is a provider decentralized and immutable ledger that record all the transaction related to the fund, ensuring the real time visibility and reducing the risks of error. So key benefit of this blockchain are the transparency between the stakeholder, because every stakeholder should know what is going, because it is a provide a detailed ledger of all the transaction, means all the fund till start with the fund and end with the transaction, what transaction they have done. This may be income, expenses, asset, liability, anything. So transparency between the stakeholder. Security, data protection, through data protection. Immutable means it is a record keeping activity, means it's generating the ledger, so that's why it is a record keeping. Efficiency means the fund transfer, dividend payment, compliance check are come into the efficiency. Reduce the immediate intermediary cost between the custodian registrar as well, and enhance the trust of a confidence among the investor on this part. So this is a blockchain. So this is a simple example I have prepared on the private equity investing into tech startup. So how they start? So key stakeholder are the authorized custodian they appoint as a BNY. Authorized participant is Blackstone. Plain participant are the pension fund. So example is Carl Pierce. The fund accounting process start with the revenue recognition. Management fee charge 1.5% of committed capital. So here who is managing? Private equity managed by the general partner. So general partner charge a fee of management fee, because they are handling the operation of the whole fund and they are taking the decision as well. So capital call as well. So capital call is a term that used into the private equity when they required money, like subscription you heard. So in private equity the term used as a capital call and drawdown. So I have a one loan syndication series is going on, so I will paste this link. So you heard you will clear your doubt on the capital call and drawdown as well. Asset valuation, quarterly valuation based on the fair value accounting. Distribution, process for the startup IPO distributed based on the investor commitment. So this is a mutual fund example I have taken. The S&P 500 index fund. So retail investor, individual investor buy share through brokerage platform like Zerodha, IIFL, or maybe ICICI Direct, HDFC securities like that. Revenue recognition, Vanguard charge expenses ratio 0.04, generating 2000 million annually. So sometimes if you exit the fund, so they will charge a money. Asset valuation, daily NAV calculation based on S&P 500 closing price. So they are the NAV calculation are mostly taken from the S&P 500 index fund. Then the reporting, quarterly, annually reporting for compliance and SEC guideline. So now we'll discuss detail on the challenges and opportunity for this part. We can say that regulatory compliance, navigating the complex regulation and assuring compliance with the this. So regulatory compliance they have to follow. Then the data management. So in data management we can say that data management are something like a data integration, aggregate data from the multiple source such as custodian, broker, registrar and transfer agency. So for example, for making a consolidated NAV update, subscription detail, redemption detail as well. Then the data accuracy under also come under the data management. So here you can use the reconciliation tool between all the stakeholder, so to check if there is a discrepancy between the trade among the fund, among the investor, stakeholder, something. Then the data security is something also come on data management. Sometime important data should be encrypt, role based access, like according to the role in the company should they get access. Audit trial to protect the sensitive financial data as well, so timely basis they have to do the audit also. Real time reporting, generate reports such as portfolio performance, investor allocation and regulatory filing are also come under this part. And automation and AI. So automate routine tasks like fee calculation, expenses allocation and compliance check are also come into data management. Identify the normal thing that you are doing casually and make a macros or use the Power BI or maybe use the pivot table to integrate this. So AI is also coming to data management part. So this how this I am finished with this. So now the technology adoption also play this role on the part of its challenges and this. So in technology adoption is something like automation has come for reconciliation, fee calculation and general entry. Human resource error has errors and increase operational efficiency as well. So they include this. Blockchain I already explained you, it is the most secure part, record of each and everything into general ledger and share to among the stakeholder to maintain the transparency between the stakeholder and maintain the trust and give the real time fund tracking and investor reporting as well. So here we can use the technology cloud computing as well, enable remote access to the fund data and collaborative workforce, offer scalability to fund increase data volume as well. So this include into this part. So Now moving to the transparency and the reporting part. So transparency and reporting part include the clear financial reporting. Report must have the accurate and reflect fund specific income, expenses, asset and liability. So you heard in every term income, asset, liability, stakeholder. So that's why I explained in before. So what I am relating now you can able to handle. Segregation of restricted unrestricted fund as well. Adherence to standard, also coming to this what we have discussed, GASB, FASB and IFRS are come into the transparency and reporting part also. So this they have to maintain their standard when they are running the fund. So fund may be like mutual fund, private equity or maybe anything. So this is how I done with this slide. So future of the fund accounting is automation. Some you will see more automation on the fund accounting side, like your application side, or the human will make some macro Power BI or pivot table, or maybe something will be happen. So be ready with this. Data analysis we already discussed, blockchain technology we discussed. So I want to tell about the ESG integration as well. So ESG is most important as a part of environmental, social and governance. So its key features are the very important. So it is a matrix tracking carbon emission for the environmental reporting, workforce diversity, community investment for social metrics, and ethical governance on this part. So just want to tell you how this fund will work like this. So I collected some example as well for mutual fund. ESG integration has been come into the renewable energy project, focus on environmental impact, long term return. For PE firm, it's come under the ESG scorecard, pre-exit, governance reform and community benefit. And for hedge fund also it came short selling the companies with poor ESG practice to drive corporate change, social activism. So this how the ESG will come into the shortly on the future of fund accounting. So mostly ESG related terms are those terms which are related to environmental, social and governance part. So they invest into some renewable energy or something which environment cannot affect and support to the environment. So this project will come under this. So that's how the key takeaway and next step towards the fund accounting. So the key takeaway are the transparency. Fund accounting play a critical role in ensuring transparency and compliance. Second, stakeholder are the custodian, broker, investor or retail or maybe institution investor. What we have discussed should be the process of a fund accounting. It will never change. Technology will always come. AI will disturb you. You get a benefit of AI. So it is mainly coming through automation, data analysis and enhanced reporting as well. Maintain the standard. The future of fund accounting hold extending opportunity for innovations and the growth as well. So this how I am done with all the fund accounting part. So mostly I cover all the part of a fund accounting. But if you have any doubt on this fund accounting part, you can directly comment us. So and that is a wrap of my side on fund accounting. But least not last is a backbone of financial accountability in today's investment world. Whether you are managing a mutual fund, private equity portfolio, hedge fund, fund accounting ensure transparency, compliance and trust. So this how I just go with the detail of this fund accounting. If you like this all the thing, please do not forget to like, subscribe and comment on this part. So anyhow, this is I am done with this part, so I am ending. Thank you so much for watching. We'll meet you on the next video.